you. Moody is lowering its credit rating on the United States debt one notch to AA from AAA.
A plus from AAA. Now, the last time this happened was 2011. Different agencies started it then.
The U.S. dollar is quietly losing its power, but the U.S. dollar has been the king of the world for a long time. It's the money we use to buy oil, to trade goods, and to keep our savings safe. But what if this king is not as strong as we thought? What if it's quietly losing its power?
A decision on U.S. interest rates. Officials are largely expected to lower rates for the first time this year.
In May 2025, that shield got a small crack. A big company named Moody's, which rates countries based on how safe their money is, gave the U.S. a lower score for the first time ever. It went from the top score, AA, down to AA1. This was a big event because it was the third time in recent history that a major rating company lowered the U.S. score. S&P did it in 2011. Fitch did it in 2023. Now, all three of the biggest rating companies have said the same thing. The U.S. is no longer a perfect AA. This means the dollar's safety premium is starting to wear off. It's no longer seen as completely safe, and that makes people a little less willing to hold it. It's like finding a small scratch on a very expensive car. It might not stop the car from running, but it takes away a little bit of its value and its perfect image. You might be wondering why the dollar is suddenly showing weakness this year. The reasons are a mix of small events and big trends. The most direct and simple reason is about money and how it moves.
Overnight, interest rates increased further. What you see now, June 2023, is that interest rate seems to stabilize.
U.S. interest rates started to fall. At the same time, European rates stayed higher. The interest rate gap got much smaller. This tiny change had a big effect. Imagine you have $100. You want to put it in a savings account. One bank offers you 5% interest and another offers you 2%. Where would you put your money? The 5% bank, of course. Money loves to go where it can grow faster. Suddenly, money had less reason to be in the U.S. Investors started to move their money to Europe to get better returns. This caused the euro to get stronger against the dollar.
Well, the dollar index is on screen because that really has been a conversation as well, right? 11% of a decline in the first half of 2025.
In July, the euro reached its highest value in almost 4 years. The U.S. dollar index, which shows the dollar's value against a group of other currencies, has been falling since the beginning of the year. This is a very clear sign that the dollar is losing its power. This year, many investors are doing something new. They are buying U.S. stocks and bonds because they are still good, but they are also selling the dollar to protect themselves from currency risk.
Starting tomorrow, the United States will implement reciprocal tariffs on other nations. China, 67%. That's tariff.
A strong currency needs to be predictable. When a government makes surprising, fast changes, it makes investors nervous. In April, the U.S. announced a huge new plan to put a 10% tax on almost all imported goods. This was a big shock, but then, very quickly, the plan was changed again. Some of the taxes were lowered, but new ones were added on goods from China. This constant back and forth showed that the government's policy was not stable. This wobble in policy made investors feel that the U.S. was a riskier place to put their money. When there is more risk, people want to sell the currency.
President Donald Trump and the creation of a strategic crypto reserve. And I do want to put up this post on Truth Social.
Then, in March, there was another strange announcement, a new order to create a strategic Bitcoin reserve. This was a completely new idea, but it made people ask questions. Is the government's money policy being used for political reasons? A currency's strength depends on trust, and trust depends on a government's policies being consistent and stable. When that consistency is questioned, the currency loses some of its value. The problems with the dollar are not just about this year's news. There are bigger, deeper problems that are slowly changing the foundation of the U.S. economy.
And now we're in a situation where the government has such a large amount of debt and has a problem facing that debt, paying that debt.
The U.S. government has a massive amount of debt, and it has to pay a huge amount of interest on that debt every year. In 2025, the interest payments are expected to be around $952 billion. To put that number in perspective, it's almost as much as the entire defense budget. It's like a family that has to use a big chunk of their salary just to pay off the interest on their credit card debt. A fifth of all the tax money the U.S. government collects will go just to paying interest. This is a heavy, heavy burden.
U.S. national debt has reached a record $37 trillion, according to the latest Treasury Department report that was issued Tuesday.
The national debt is still growing very fast, now over $3.7 trillion. When a country has so much debt and so many problems paying it off, it makes people question its long-term health. This lack of confidence in the country's finances directly hurts the value of its currency. It is a slow and silent problem, but it is one of the biggest reasons for the dollar's decline. You might hear the term de-dollarization, which means countries are leaving the dollar completely. This sounds scary, but it's not the full story. The real story is diversification. It's not a sudden collapse. It's a slow, quiet change.
In 2001, 73% of the world's reserves were held in U.S. dollars compared to 58% today.
The U.S. dollar's share of all the world's money reserves has slowly been going down. It's a very slow drop, from 58% to 55%. It's not a fall off a cliff. It's more like a slow, gentle slide. Central banks, which are like the banks for countries, are a good example.
Gold is the only currency that can't be printed. And it's the only asset which these central banks have that isn't somebody else's liability.
Since 2022, they have been buying a huge amount of gold, more than 1,000 tons a year. They are doing this to protect themselves. They don't want to rely on just one currency, the dollar. They are spreading their money around, and gold is a big part of that.
The yellow metal has gained nearly 40% so far in this year.
The price of gold has gone up by almost 40% this year. That big jump in the price of gold is a clear sign of this move away from the dollar. It is a mirror image of the dollar's slow decline.
The Chinese currency's market share reached a record high of 4.7%.
Some people also say the Chinese yuan will take over the dollar's place. While the yuan has been growing in importance, it's still a very small player. It's only about 2 to 3% of global payments. It's not a real competitor to the dollar right now. The euro is also becoming a strong, stable alternative. So we are not seeing a collapse of the dollar. We are seeing a slow loss of premium and a quiet diversification into other currencies. It's easy to get caught up in the idea of a total dollar collapse, but the truth is more complex. The dollar is still the most important currency in the world. It's used in most international trade, and for most loans, the dollar's place at the top is not going away overnight. The myth that is changing is not the dollar's power, but its perfect safety. It's no longer the one and only place to put your money. It's still strong, but it's no longer seen as the one and only superhero. To really understand this, let's look at 3 real examples of what is happening in the world right now. Imagine a European company that has a lot of money invested in the U.S. When the euro starts to get stronger, that company might decide to bring its money back home. This is called repatriation. To do this, they have to sell their dollars and buy euros. This creates more demand for euros and less demand for dollars, which puts pressure on the dollar and makes it weaker. This is a very real trend right now. Central banks are not just buying gold as a hobby. They are buying it as a very serious way to protect their country's wealth. In the first half of 2025, central banks bought a huge amount of gold. In the first quarter, they bought 244 tons, and in the second quarter, they bought another 166 tons. This is not a small, meaningless number. It shows that major countries are trying to have a balanced portfolio and not rely so heavily on the U.S. dollar.
One thing that really stuck out, we indeed did have strong personal income and spending, as you were just discussing. Over the haul for the last year and a half, it really hasn't done anything to remain closer to the 2% target.
Here's a surprising fact. Foreigners own a record amount of U.S. bonds, over $9.1 trillion. This shows that the U.S. is still a very attractive place to invest. But there's a key detail. Many of these investors are also hedging their currency risk. This means they buy the U.S. bond, but they also make another trade to protect themselves from the dollar getting weaker. They want the interest from the bond, but they don't want to lose money if the dollar loses value. This action of selling dollars for protection is one of the main reasons for the dollar's weakness, even though people are still buying U.S. assets. This might all sound like a very complex issue for big companies and governments, but a weaker dollar has a direct impact on your life.
Bureau of Labor Statistics reports that consumer prices rose 0.7% last month, pushing the annual inflation rate to its highest point in 4 months.
If you live in the U.S., things that are made in other countries will get more expensive. This includes things like medicines, electronics, and cars. Going on vacation to another country will also cost more money because your dollars won't buy as much. However, a weaker dollar can also be a good thing for some people. For U.S. companies that sell a lot of their products overseas, it helps them. Their sales in other countries, in euros or yen, look bigger when you convert them back to dollars. The big question is, what happens next? No one has a perfect crystal ball, but we can look at 3 main possibilities. This is the most likely scenario. The U.S. dollar will continue to get a little weaker over time. It won't be a sudden crash, but a slow and steady decline. Gold prices will stay high because it's seen as a safe alternative to the dollar. Money will slowly start to flow into other countries. It's like a slow leak in a tire. It's not a flat tire right away, but you have to keep adding air to it. This scenario means that the world will slowly become less dependent on the dollar and more balanced. If the U.S. government makes another big surprising policy change, it could create another shock in the market. This could be something like a sudden big new tax or a big new spending plan that isn't paid for. Such a shock could cause the dollar to fall quickly. This would make the market very unstable and create a lot of ups and downs. It would be like hitting a bump in the road and causing the car to swerve. There is a chance that the U.S. government could work to fix its debt problem and make its policies more consistent. If this happens, the dollar could stop its slow decline and become stable again. This would require difficult decisions, but it would show the world that the U.S. is serious about its finances. This would make people feel more confident in the dollar and might even cause it to get a little stronger. This is the least likely scenario, but it is not impossible. You can't control what happens to the dollar, but you can prepare. It's smart to think about your own money and how you can protect it. First, think about diversifying your investments. Don't put all your money in one place. You can invest in things that are not tied to the dollar. For example, you can buy foreign stocks or bonds. You can also buy gold, which has been a great place to put money when the dollar is weak. Second, you can use time diversification. This is a simple idea. Instead of investing all your money at once, you invest a small amount of money over a long period of time. This helps you deal with market ups and downs. When the market is down, you buy more for less. When the market is up, you buy less for more. Over time, this method can help you grow your money safely. Third, learn about hedging. For example, if you buy stocks in another country, you can also make a trade to protect yourself from currency risk. We started by looking at the headlines. Now you know the full story behind them. A reserve currency doesn't change overnight. The world is not abandoning the dollar, but something very important is changing. It's the premium, the extra trust and safety that the dollar used to have. That premium is quietly fading away. The dollar is still the most powerful currency, but it is no longer the only king on the block.